Hi there. We're talking about the modified accrual basis of accounting today in Chapter 3, and we're going to be looking at a government's balance sheet. So this is a very small part. It's not a comprehensive discussion of modified accrual basis. We're just going to be thinking of how a balance sheet looks. So first notice that we have a very simple balance sheet. All we have in terms of assets is cash, and we also have some supplies because we want to specifically look at how the supplies show up in fund balance. So notice in governments, what would be equity in a for-profit business is now fund balance. And so one of the things we run into right away is that we have non-spendable inventory. We can use it, but we can't spend it. So I'm going to pop in that same number. This needs to match the number under general fund supplies. Okay. Then for the general fund, let's just suppose that of this cash, 4,500,000 is sort of set aside by the government as the rainy day fund. So a lot of governments have a rainy day fund, and the idea is they'll just have 4,500,000 like this that's in their general fund, but they can't spend it unless they're spending it for some kind of unforeseen problem. So let's suppose they also have some other capital projects that we're not really specifying right now, and those total 680,500. We notice we have something that doesn't balance here. We have total assets in the general fund alone of 11,278,580. We have fund balance that's only 5,204,247. Anything else needs to be put into unassigned. It's part of the general fund, but it's not assigned to any specific thing. So we'll put 5837, 533 here. And I'm missing something. I still don't have a balance, and that's because I was also supposed to put in 236,800. You wouldn't have this any place. You would just have to know and be told by other parts of a problem that some of the general fund was assigned to other purposes here. And those could be any number of things. So now we've got a general fund that balances, but we still have to get to some of the other funds. Remember from Chapter 1 and also your reading in Chapter 3 that the general fund is basically the government's money or government's assets that aren't encumbered for any other purpose. They can use it for anything they want. Everything else here is going to be held for a purpose. So there could be special revenue items. These could be things that, let's just suppose that 312,000 are part of an intergovernmental grant. So this city of Salem is a city. Let's just imagine that the state, could be the state of Virginia, has provided an intergovernmental grant for $312,000. Now, typically when the state does this, they will say the city can only use this on certain things. And there'll be a list of things in a manual someplace. And this money then is restricted. So they do have it in cash, but it's restricted until they have a specific use for it that complies. Let's also imagine that the city has a school lunch program, and some of the tax money that it's collected, it's assigned to the school lunch program. Now, it's beyond the scope of our discussion right now, but it may be that some other government rule, for example, another rule the state might have, might say that the city has to assign a certain percentage of its collections to the school lunch program. We're not really thinking now about how it got there. We're just thinking, let's imagine they have some assigned fund in school lunches. Okay, this community is going to renovate its courthouse. So they might well again have $500,000 that might be the same level of government, might be state of Virginia, could be federal government, has provided some money that can only be used to renovate the courthouse. They have to hold it there until they renovate the courthouse. Well, they also might have some committed funds. So this might be their own collections that either by the decision of city council or by charter or something, they're holding this money for the courthouse renovation. But notice it's a little bit different than the intergovernmental grants at the top. Now, if there's a difference here, which there is, you've got $912,000 up here, and you've got $880,000 here. They have to balance, you know how accounting goes. So whatever the difference is, the residual, let's say, would go into other capital projects. And you could put it here as 32,032. Now the fund balances out. Debt service is a fund where typically the government will set aside some money to pay down its own debt. So a lot of times the way they'll do this is they'll create something called a bond sinking fund. They'll maybe issue bonds. The money that comes from the bonds will be looked at by an advisor, and the advisor will tell just how much money needs to be put in so that at a certain point later the debt can be retired. And this will go into bond sinking fund. And if that's the only source of that part of the debt service fund, you've got $230,000 in cash. You also have $230,000 restricted to the bond sinking fund. Notice then that we now have a balancing modified accrual basis balance sheet. So the takeaway from this is to recognize that all of a sudden, unlike a business, we're very interested with these two simple assets, cash and supplies, at what fund they're part of. And also we have to break out the fund balance, which is much like equity, into which fund the equity, or in this case the fund balance, is part of. But in the end, the standard rules of accounting still apply, and total assets must equal total fund balance. Also note, in most government's financial statements, you'll find some liabilities in here. Just to make this simple, I didn't have liabilities like accounts payable or that kind of thing, but typically a government would have them, and there'd be a difference between total assets on one side, and that would balance to total liabilities plus total fund balance. I just don't have any total liabilities here. Well, good luck, and I'll see you soon in the next learning unit.